This is the MTPredictor weekly market update for July 7th. So welcome all back from the 4th of July holiday here in the States. Canada had their holiday as well. And after holiday, a lot of times you do get a trend change. And we did see, here's the S&P weekly, and this is the latest build of the MTPredictor version 7.5. I'll just point a few things out about this latest build, which is very nice. Here on the right hand side I have my scanner set up. I've got one for commodities, the E-mini day session. There's the Dow 30, some Forex, and the 24-hour charts here for the Dow, the S&P, the NQ, and the Russell there. But what's nice about this as well is I can get a good snapshot here. For instance, if we look at, let's look at these 24-hour charts of the E-minis. These are the weekly charts. You can see that here. This also tells me, well, if there's any trade setups currently, it would appear here. Again, it's a scanner. It's scanning these markets for any automatic trade setups. But it also gives me a quick snapshot and tells me what wave pattern, if any, is on the chart currently. So we've got a wave 4 pullback and an uptrend here. And if we go to the chart, I'll put the analysis on here. Just right click. I'm going to choose Elliott Wave Intermediate, and this is what we were following before the holiday. Remember, we hit a wave 3 target there, and we anticipated this pullback into wave 4. We've gotten that, and last week we had the nice blue buyers candle that was telling us that buyers were in fact now overcoming sellers in this support area. And so we anticipated we could rally off of this level, get that trend change after the holiday here. We can project up wave 5. Again, using the tools and the software. Here I'm just going to look for up wave 5. Find wave 1. Here's the bottom of wave 1. That's our first click here. And this projects the wave 5 target there just above 1700 in the current contract of the S&P. Now, we've had our pullback into wave 4. It doesn't mean that we can't have maybe like an A, B, C correction and come back a little deeper into wave 4.
Connection lost.
We just lost connection there. We could certainly, let's see if that comes back on the chart here. We could certainly rally right from here straight into wave 5. That's definitely a possibility. We'll see how this unfolds. So this, and again, similar. As we looked at the scanner there, told us basically that all the patterns in the E-minis were the same here. Let's just look at the Dow. The Dow pattern here, again, Elliott Wave Intermediate. It tells us we had a wave 4 pullback here. Also, we want to look back here to, let's see, this is the weekly chart. Let's go back to the prior all-time high in 2007. Taking a decision point there. You see there's the weekly decision point, major decision point resistance. And there we are in this area. So if we go wave 5 up now, or if we do an ABC correction into wave 4 and then head into wave 5 here, we're also in this major weekly resistance. This is a decision point off of the prior all-time high in the Dow, so it is one that we want to pay attention to. I'm just going to project up wave 5 here and get that level on the chart. Okay, so it looks like that's going to come in just below 16,000. 16,000 is a nice round number in the Dow as well there. And so we'll see how this unfolds. But again, we'll just take a quick look at the NQ so you can see these are all pattern-wise in agreement. Again, NQ is in a wave 4 heading into potential wave 5 there. And finally, for those that watch the Russell also, this was a wave 4 pullback heading into wave 5. Let's just project the wave 5 here on the Russell here, because This one had a pretty good move last week. And see where that target comes in. Alright, so we'll need to make a new high, take out that wave 3 target there. We'll have some decision point resistance just ahead of that target. So we'll see how these kind of finish out in a wave 5. And then if we do go wave 5 up, then we would anticipate a correction back to, now we could begin a correction in minimum or typical wave 5, or maybe even maximum wave 5. We'll weigh that all out when we get there. But we would anticipate then a correction if we go wave 5 up somewhere in here back to the wave 4 DP. We'll be able to project that out if we do go wave 5 up. Alright, so that's the stock market overall. Let's take a look at something a little more interesting maybe. This is silver. What I did here, we're going to look at several different scenarios. We know that, well, in fact, we had an uptrend obviously in silver here, and then formed this long consolidation, this descending triangle. Typically you see this as a continuation pattern in a downtrend, but sometimes it can be a topping pattern. It's just basically shows distribution. We had a breakdown of that triangle. The measurement for the target, you take the widest from the peak here to the base, and the target, interestingly, you would put silver down around $2.80 an ounce. Usually on these initial breaks you get a retest of the trend line there back around that $25 level, and then onto the target. Now obviously these are probably about 40-50% accurate maybe, but just interesting to see the analysis on the chart here. The other scenario that we were looking at, again, if we pull up our, if I can here, probably have to get rid of this. There was our wave 5 top, and so we were anticipating a correction. Here's the last run from wave 4 into wave 5. We take our decision point off of the wave 4 level here. We got too much analysis on here. Take our decision point off of that, and that's the level that we've hit. Now we have traded below that level. I want to see this week where we close. We still have strength to the downside on the STF, telling us maybe more downside ahead. Doesn't mean that this market can't correct. Back to the upside here, we'll look at the daily chart in a second. But if this STF still shows strength to the downside as this market pulls back, typically you get a rollover to new lows. All right, so if this area does give way, this wave 4 support, then we look to the wave 1 here. Go back to the bottom of wave 1, we take our decision point off of wave 1, and this gives us the next target, and that's why we've been looking at potential, if this level gives way, of $10, $11 silver an ounce, at least in paper silver. Again, we get below $15 in the paper silver, and you may see increased premiums on the bullion, where even though physical or the paper silver might be trading at $10, $11 an ounce, you won't be able to buy the bullion for that. So we'll see how this plays out. Let's just look at the daily chart here to see the possibilities of any rally here. Again, we looked at this level here on the daily chart. If we take our Elliott wave tool here, this was our wave 5 pattern to the downside. We did reach the minimum wave 5 pretty quickly there on that initial spike down. We consolidated, things broke out of that, rolled over again. Here's our typical wave 5 target here, just shy of that. So again, we could possibly roll over maybe in that $18 level, and then we'll see if we do get some type of rally. Again, if we do go wave 5 down here, well, we're in that wave 5 area, so we could get a correction back to, again, the wave 4 DP, which would be back around this 25.50 level in silver. And then this will be an important area if we do get there. If this area holds as resistance, then the trend, which was down prior, should continue down. If they take this area out to the upside, this 25.50 to 26.70 area, if they take that area out to the upside, then we go find wave 1, look to the top of wave 1, take our decision point tool. Again, this is off the daily chart, and that would give us our next target right around $35 silver. All right, so we'll watch these levels. Again, if we just continue down here and they take out the weekly, we'll watch the close this week. I want to get a kind of a full week. We're heading into earnings season here, and so markets sometimes like to rally ahead of earnings, and then we'll see when the earnings start coming out. But we'll see where this silver closes this week. If we do close below this area and then that low gets taken out, then I would anticipate that we may eventually find our way down to that $10, $11 area. The other option is we could have an extended period. If they take that low, if we get a close below this weekly wave 4 decision point, and whatever the low is on that particular week, if that low gets taken out, then we could get an extended kind of period of consolidation as well. If we want to look at, I'll give you an example of Apple Computer. So here's Apple Computer on the weekly chart. Again, we anticipated the fact that Apple went wave 5 up and that we should then get a correction back to the wave 4 DP. You see how we've traded. We got a close below that level. That low eventually got taken out. That tells us that the potential is, if we scrunch this up here, go back to the bottom of wave 1 here, we take our decision point tool, and this gives us the next potential level for or target for Apple. And again, we've looked at this before, but that would be right around the $263 level in Apple, trading around 417 now. Or like we said in silver, if we do that, we get that close below that wave 4 DP, that low gets taken out, we could get an extended period of kind of sideways action or consolidation, similar to what we got here in Apple. Apple has not been able to get back into that decision point level, kind of snap back into that level and build a base, and then we'd expect it to carry on higher. It's consolidated below that level, and so the danger is, again, this so far this $400 level has kind of held, but they haven't been able to get back above the 450 and hold above that 450 level. So these areas give way down here. Again, another sign that we're working our way eventually towards this area. We're going to need some really convincing action back above 450, closing above 500. Those highs get taken out to the upside and kind of building a base. So we could see similar action in silver. We'll see. All right, now here's the weekly chart of oil. It's been a while since we've taken a look at this one because we know it's been in this long, it's one of the longest periods of consolidation in oil that we've seen, and it's in that 80 to basically $110 level. Now people have kind of got excited because oil has reached $100 here, but we were anticipating the fact when we came down here in that $80 level that we should bounce and probably end up somewhere around that $110 level as we've seen. So I won't really get excited about oil. We talked about this before, that eventually this $80 to $110 level will break. Now we've seen moves up to 120 here, but you see how it just got smacked down very, very quickly. It has not spent much time at all. This was 1 week. It just that it took a while to trade up to 120, but just 1 week that they slammed it back inside that $110 level, back down to the $80 level. And so this is really just more consolidation. Now, obviously, that you could have a nice trade in here on the smaller time frames and stuff, but we're just looking at the bigger picture here. Oil's still in that $80 to $110 level. We start getting above 110, and we'll have some interest there. But it's going to have to hold above that 120 level to be convincing that we're going beyond that. So again, we talked about you could be a buyer down here. In that $80, $85 level was a good opportunity to buy there, and then we start getting up into that $110 level, then you may want to be trailing with a trailing stop, or because we're going to start coming into some resistance, some area of major supply in here when we get to that level. So if we get to that level, we're getting close now. So all right, so that's it. Let's see how things play out this week. Again, heading into earnings season, we'll see what we get. And we'll take a look at some other stuff next week in the weekly market update. So have a good trading week. We'll see you back then.